Alright, so I'm just going to do one video today, ultimately. This is a good article from Silver Doctors. An extremely short history of fiat money. This is, again, once again, why I feel it's very important for people to have precious metals. And when all this goes down, with the economy, the world markets, the world economies, they try to implement their one world currency system, whatever the hell it is. This isn't going to happen twice in any reasonable amount of time. You'll be dead, your kids will be dead, your kids' kids will be dead, and God knows how many generations will come by before some other morons try to do this again. So this is the only moment, this is the only chance you have to hopefully deal with what's coming properly. Because if you get it wrong or you don't take action now, you're not going to say, hey, let's do a do-over. And what I'm referring to is getting your precious metals. But, he says an extremely short history of fiat money, and here's a spoiler alert, it fails. Submitted by Gary Christensen, Deviant Investor. Suppose you had a printing press in your basement, along with a supply of perfect paper. You could slip down to your basement and print a batch of perfect $100 notes or 500 euro notes, but only in an emergency. I predict that you would find many emergencies. Suppose the government or central bank had access to that printing press, and they do, and suppose they printed and borrowed only in circumstances of economic need, political promises, war, necessary deficits, presidential junkets, Wall Street bailouts, economic stimulus, vote buying, emergencies, and special circumstances. Does that sound familiar? What could go wrong? And that is the problem with central banks. Deficit spending, paper money, digital money, fiat money, and debt-based money. There is minimal control or limit on its creation. The Western world lives with all the above, but pretends to have no clue regarding why. Global debt exceeds $200 trillion. Cannot be repaid. Income disparity between the wealthy and poor is huge and rising. Much of the world is mired in poverty and debt. The U.S. has nearly 50 million people on food stamps, or SNAP, as you may know it today. The U.S. government is in debt nearly 19 trillion, not counting the 100 to 200 trillion in off-balance sheet liabilities and unfunded liabilities such as military pensions, Social Security, and Medicaid, and by the way, cannot be repaid. Mathematical certainty, it cannot. Politicians pay an inordinate amount of attention to the legislative needs of the major banks and are usually compensated accordingly, as in campaign contributions. The political system in the U.S. seems obsessed with keeping the banking cartel, military contractors, big ag, and big pharma profitable at the expense of the citizenry. Congressional approval ratings in the U.S., at least, are about 10%. If that doesn't speak volumes. But what could go wrong? Borrowing and printing money into existence increases the total currency in circulation and creates consumer price inflation. Just look at the entire world right now, minus the U.S. at this point, but the entire world. Let me know how inflation's working out for them. Let me know how their dollar devaluations are working for them. Gold has increased in price to about $1,100 from $20.67. U.S. debt, nearly $19 trillion, is so high that the Fed must maintain ultra-low interest rates, which destroys capital, punishes savers, and widens the wealth gap. I repeat, what could go wrong? Ultra-low interest rates encourage malinvestments, booms, and bust, which is the boom and bust cycle, or the business cycle, as you may know it. The shale oil miracle and resulting bust is one example. Negative interest rates exist on European government debt, around 5 trillion and counting, which is insane. Excess debt encourages higher taxes, capital controls, and weak economies. Booms and busts are more common and more devastating. A stock market crash in 2016 is not unlikely. Remember 2000 and 2008. And many more, including more unemployment, bankruptcies, store closings, wars, and human misery. Paper money, digital money, and debt-based currencies are basically dishonest, and citizens and societies suffer the consequences. However, the banking cartel reaps massive profits, which they use to purchase politicians and beneficial legislation, which maintains their power and influence. And that begins to explain what can and does go wrong. I saw a man pay for groceries last week with cash. Long green, with no ill effects. Visa and MasterCard did not collect their usual skim from the transaction, and the buyer and seller were unaffected. Imagine a world where money was honest, backed by something real, not the promises from bankers and politicians, could not be created by politicians or banker, and where money was a reliable store of value. It won't happen next month, but it could happen. Unfortunately, a world where we use honest money might only occur if the current financial system crashes. If a crash occurs, paper assets might be marked down much closer to intrinsic values. What is the value of a 5-year bond issued by an insolvent government that confiscates a small amount of principal cash each year? Negative interest rates. Perhaps it is far less than face value. Reminder. Final comment. Gold and silver, not in silver, gold and silver have intrinsic value and no counterparty risk, unlike everything I just read you about paper money and their digital currencies and all that garbage too. So, on a side note, silver is almost to $15 an ounce. Gold is just about touching $1,150 an ounce right now. So, has the club decided to allow some kind of rise in the price to happen for some certain reason? No idea. But I know it has risen. I also know the Webbot talked about the whole move with Bitcoin. And then after that, gold and silver, specifically silver was mentioned more, would rise. But, in my humble opinion, this ain't enough. It needs to be a wow factor. Now, if you take into consideration where silver was at recently, last couple days or so, actually, we've had at least a 6% move or so up. 6% is pretty nice. It's a pretty decent move. But I don't believe that that's what the Webbot was talking about. When I come out here or look at my phone and say, oh my God, silver's up $3 right now, or something like that, a move that you don't normally see in a day, that, I believe, is what the Webbot will be talking about. Keeping in mind, long time ago in the reports, and the data is pretty much still there. It has been there constantly. Numerous reports in the past talked about it. We would see silver moving $5 in a day. It doesn't mean it starts at 15 and ends up at 20. It might mean it was at 15, went up to 18, went back down to 16, ended at 19, you know. Some kind of just a $5 move in a day. to be followed by, when things get really interesting, approximately $20 a day. And I know that's hard to believe, but you must remember, as I keep reminding you, November 2014, approximately, I believe it was November, CME Group adds some new rules to gold and silver circuit breakers. If silver moves $3 in a certain amount of time, I guess during the trading day, in a certain amount of time, circuit breakers triggered. You can't trade silver for a small period of time. Then okay, markets are open back up. Go ahead, up. It hit $3 again. Boom. Close it down for a minute. Trading halted. Long story short, there's wiggle room for $12 in that circuit breaker rule or whatever. For silver, it's $12 in total for the day. Gold is $100 moves, but $400 for the day. So, if what I just said sounds absurd, with $5 day moves is absurd, $20 is out of your damn mind, why is it already written in the rule book now, which has never happened before, ever, for the CME Group, that says essentially a $12 in a day move might be seen, or else it wouldn't be on paper to deal with it. And as I've said before, that rule's not there so that silver is going to go down, and they're protecting you and I, you know. If we're at $14 silver, matter of fact, it's almost $15, but recently it's been hovering at $14, and we have a $12 move in a day, and it's all down. That means silver is $2. Do you think that's why the club put that rule in place? No. They smashed it from $50 down to $30 to $20 to $15 to $14, etc. with no rules in place, really, right? Well, technically it wasn't quite it wasn't 14 when they put the rule in place in 2014, but it was low, 15, 16, wherever it was at. It was hitting a low. But now all of a sudden they have this rule as of November 2014. It's to deal with the exponential price rise in precious metals. That is why they put it in place. The club knows this because they're the ones doing it. They make the rules. It's their system. It's their game. And they change the rules at the last minute when they need to. But in advance. Last minute, but in advance. So that move alone, if you just got into studying this stuff and what is he talking about, and I've heard about precious metals and I've been thinking about getting them, that move, forget everything else you heard of, should be enough to say, oh, now that's an interesting thing. Why did they put that rule in place? It's never been in place before? No, never. What are they preparing for? That's enough. That should be enough to convince anybody that they know the price is going to be rising exponentially. And this $14 and $15 silver we get to have right now, you better load the boat while you can. Take care.